moving on with our second part on Binary Options Academy projects, and this is how to treat corrective waves, or how to trade binary options when you look at corrective waves that market makes. And it should be mentioned, or it should be considered all the time, that markets are forming a lot of or markets are spending most of the times in corrective patterns. That being said, time spent in corrective patterns, the most, let's say, important thing for a trader to do is to be able to identify these corrective waves. If one can master these corrective waves, then can go and buy put options or bind or call options and trade with great success. Now let's start with the triangle. This is the Euro US dollar 4-hour chart, and what I would like to show you here is a classical triangle. This one acting as a reversal pattern, and goes A, B, C, D, E, so something like this. This would be our triangle. That goes from A and C. This would be the A and C triangle. See, it is in an inverse relationship when compared with this one here, in the sense that this one breaks to the downside and should be labeled A, so wave A here, then the B wave here, B, C, and D, and E. So A, B, C, D, E for the whole leg there, and for the whole pattern. And normally all these legs here, A, B, C, D, they should be corrective waves. Now, by the moment that such a pattern is being broken, by the moment that the B to D trend line is broken, that is the most important trend line of them all in a contract in triangle. What we need to do is to go and buy put options, and the expiration date can be chosen depending on the aggressiveness of your trades, or on the type of the trader one is, and that is the most important thing to consider. This is a 4-hour chart, so basically take a look here. You have all the time in the world for the pattern or for your trade to expire in the money. Now, what we also have here is a classical flat. From my point of view, a flat goes with a 5-way structure, in the sense that ABC, our ABC for here, from here, or a flat would be this one. It goes wave A to the upside, as you can see here. Then it goes the B wave to the downside, and then a 5-way structure. 1, 2, 3, 4, 5. This is being called an ABC. It should be labeled wave A with a 3-way structure. As you can see, it is corrective. Then the B wave with a 3-way structure. As you can see, it is corrective. And then with a C wave that should be, and it is mandatory actually to be, a 5-way structure. 1, 2, 3, 4, 5. This is being called a flat. What to do in such a situation? Well, this is a special type of a flat. It is being called an irregular flat, and by the time price is coming and breaks this completes a 5-way structure, you know that the flat scenario is completed, is done, and therefore right there at that very moment we might go and buy put options, as the correction is completed, or at least a move to the downside should come. How about the zigzag? Well, the difference between a flat and a zigzag, like it can be found out on the text that is coming, and that is coming with this mini educational series. What it can be seen is the fact that the market is forming the B wave with a retracement level that is compared with the 61.8% level when compared with the previous wave A. If the retracement is more than 61 point, like it is here, take a look here, this B wave here is way more than 61.8. Therefore, it means that the whole pattern there, or the B wave, is a strong B wave. If the B wave is retracing less than 61.8, like it is the case here, see the B wave is retracing only a bit when compared with the previous wave A. Well, that is being called a zigzag, and the zigzag have a structure of 5-3-5. So our zigzag in this situation here is this one. From here goes 5 waves to the downside, 3 waves here, and another 5 waves here. 5, 5, 3, 5. A, B, C. What to do in such a situation? Well, first of all, you make sure that the 61.8% level is not coming, and because that would make a flat, but a flat has a structure of 3-3-5, so this should not be an impulsive move. That means you have some flaws in your analysis. And second of all, we should look for the C wave here when the 5-wave structure ends, because most likely either an X wave, an intervening X wave will come, so we would like to buy call options, or for the short to very short term period, or the whole corrective wave is completed. Now, thank you very much for being here. We just took a look at the types of corrective waves here on Binary Options Academy project on fairbinaryoptions.com, and let's see what the markets will do with any of the corrective waves that now you know how to interpret. Thank you very much for being here. This is fairbinaryoptions.com, and all these projects are possible due to the help of our efficient sponsor, Lionite. Bye bye.